the big thing that correlates to crypto markets overall is some definition of liquidity. And you can use M2, global M2 year on year. That looks pretty much like Bitcoin year on year or crypto market cap year on year. We're at the very bottom. It usually turns around at this point because eventually the outcome is central banks have to provide liquidity in a recession because there's no liquidity. So forward-looking assets like crypto are picking it up. So they also have perfectly correlated to the turning points in the inflation cycle. So they kind of time the bottom, and I think it's time the top. So basically, I think crypto is saying, okay, inflation has now peaked, and therefore the marginal pressure from tight liquidity is gone. So my view is with, let's give it a probability, 70% probability. So that's pretty high conviction that the low is in.
Real Vision CEO and macro investor Raoul Pal believes we are very close to the end of the crypto bear market. According to the former Goldman Sachs executive, the macro environment is one of the key things that influence the prices of crypto assets like Bitcoin, Ethereum, Cardano, and others. For several months now, the macro environment has been anything but good for all forms of investments. We've seen top cryptocurrencies lose more than 70% of their all-time high prices despite the fact that we did not have a blow off top during the last bull market. On the macro end, things have also been pretty gloomy with record high prices, 2 consecutive quarters of negative GDP growth, and what experts have tagged the biggest monetary tightening in history. In a recent interview, Raoul Pal predicts that the markets are about to recover the liquidity lost because of inflation. When this liquidity returns, the macro guru sees more investors, retail and institutional, returning en masse to the cryptocurrency market. The Real Vision CEO is so excited about what is to come, adding that he is 70% certain that the worst is behind us, and we have come to the much-awaited turning point. Please watch, like, and share this video, and drop your comments about Raoul Pal's interview in the comment section below. Also, remember to subscribe and turn on post notifications so you never miss any of our videos. Let's dive right in.
I've got as clear a view as I could possibly have. Nothing is a certainty, but for me, the macro is rolling over. By that, I mean we're going into recession. We should see the things like the ISM survey and other things start falling apart pretty quickly. The forward-looking elements are falling apart already. We're seeing it globally. So that's growth evaporating. Alongside that, the narrative hasn't caught up. Most commodities are down between 30 and 50%. Oil is the last to crack, and I've been talking about this on Twitter. I've been writing about it for a period of time. Is everyone's long and expecting oil to go to $200. I think there's a washout coming and it goes down to 60. So that's the last inflation story. Everything else from the raw goods then comes into the supply chain and then eventually starts fading. So we're going to see that inventories, because people build massive inventories after COVID. Those inventories are now unsold because of the economy slowing down and inflation eating disposable income. So we've seen it from Walmart, Amazon, and others. They're going to start discounting inventories to try and shift it. People are laying off staff. So the macro cycle is going to get to the ugly phase. Okay, why is that making Raoul bullish? Well, because the outcome to that is as inflation comes down and bond yields fall, liquidity conditions improve. And what drives financial markets at the macro level the most is liquidity conditions. We've just gone through the largest tightening in financial market history because the rate of change of interest rates going up was the fastest ever. Mortgages are back to where they were in 1996, and shocking. Then the dollar went up at a rapid clip, which is a tightening of financial conditions. And then commodity prices went up. So basically, everybody's suddenly skint, as an Englishman would say. Nobody's got any money, and the economy implodes. So the forward-looking indicators suggest to me that this goes off a cliff fast until we probably bottom Fed March next year. That's the economy. Now, forward-looking assets' job is to look forward. So one of the reasons crypto, digital assets, went down was because discretionary spending came out of the market. So if you think of the legions of dollar cost average retail investors and just think of their rent or mortgage payments went up, their shopping bills went up. So suddenly, or if they were foreigners, the dollar went up. So suddenly, how the hell can they buy as much dollar cost average in crypto? They don't. So they stop. So what happens is you've removed a huge amount of buying power. So as these conditions change, that changes. Also, the other big players in the space now, the hedge funds, the crypto, the macro funds, and then the institutions, well, they're also a function of liquidity. So when liquidity is more available and cheaper for them, they can apply more leverage essentially in their portfolio. My view is with let's give it a probability, 70% probability. So that's pretty high conviction that the low is in. And therefore, we're starting the upside cycle. So the macro, I think for me, even though everyone thinks, oh my God, it's terrible, the equities are going to sell off. Well, the equity side of the equation, that correlation with equities was actually a correlation to liquidity. They're all actually correlated to the macro cycle. Can equities sell off further? Yes. Can crypto decouple? Yes, we saw that in March 2020, that crypto started going up when equities were going down because crypto is more forward-looking. However, equities have actually priced in quite a lot already. So it's not 100% clear whether equities need to go down or not. So I did a Twitter poll recently with like 20,000 people responded, which was, do you think equity markets have further to fall? 70% of people thought so. And I said, are you underweight where you typically would be or in line? And 70% of people are underweight. Well, if 70% of people think the market's going to fall and 70% are underweight anyway, who's left to sell?
Sure. Yeah.
So that's, and it was the same with crypto.
In his interview, Pal is essentially asking investors to follow the money. He believes the global money supply is not only tied to the crypto market, but the financial markets as a whole, which is why we've had a lot of correlation between the equities market and the cryptocurrency market. If liquidity does increase with more drops in inflation rates around the world, investors are going to have more money to invest in the crypto market. This is a view that the macro guru has held for a while now. In a series of tweets he put out last month, he gives more details about the correlation between the global M2 money supply and the crypto market cap. Let's quickly examine the tweets. In his first tweet, Pal writes, 2 more charts and some thoughts, this time on crypto. Is the accepted narrative of the Bitcoin halving cycle what drives the Bitcoin cycle and all crypto? Or is it the macro? I'm starting to think it's all about the macro. This is global M2 year-over-year versus crypto market cap. He accompanies the tweet with this chart showing just how correlated the crypto market cap has been to global liquidity. As the chart reveals, both are almost identical. Pal goes further in his tweet by stating, that suggests that liquidity and currency debasement are the predominant drivers as opposed to supply. I have always erred on the side of demand being more important than supply and market prices of all goods. It is the demand ebb that causes the outflow and the denominator. Those macro cycles occur within the exponential secular crypto uptrend and drive the market from overbought to oversold and back again to overbought, while the slope of adoption persists, leading to higher lows every cycle. According to the tweets, the macro guru believes Bitcoin and the rest of the crypto market are completely correlated to the macro environment. Liquidity drops, investors pull out of the markets, signifying a drop in discretionary spending, and crypto prices plummet. Then everything happens in reverse and the cycle plays out again. Pal might have a point about the influence of the macro environment in the short term, but supply is going to come into play in the long run. Currently, only a fraction of the world's population uses cryptocurrencies. When the industry spreads further, crypto assets with a limited supply like Bitcoin will become much more valued. We see a future where the crypto market influences the traditional financial markets and even global liquidity. For now, Pal has one final optimistic tweet for crypto investors. The tweet reads, note that global M2 growth is turning. Early days, but crypto is forward-looking in nature and turns earlier than most assets as it's such long duration. What do you think about Raoul Pal's take on the macro environment and the crypto market? Please drop your comments and observations in the comment section below. Also, ensure you hit the like button and subscribe to the channel for more. Thanks for watching.